Okay, Punit Misra joins us, CEO of Domestic Broadcast Business with ZEE. Punit, good morning. Thank you for joining us. Now, domestic subscription revenue have been healthy on the account of the new tariff order tailwind and rising viewership in regional markets. Walk us through the outlook on the domestic subscription revenue.
So the overall market with the transition with the NTO as well as in some part because of the current economic environment, certainly there is a dampening of the growth momentum that the overall TV advertising market had seen in the last several years. So in that sense, currently it is a difficult market on ad revenue. But given the fundamental nature of the opportunity in the country, we stay bullish that while this may be the reality now, we see this coming back to good growth sooner than later. But yes, this is a more difficult time, and we are hoping that as we get into the new year next year, we will see the coming back of the double-digit growth that television was used to.
On the other hand, domestic advertising has remained muted in the wake of advertising and slowdown, and largely because of withdrawal from the FTA platform. In the light of the current slowdown and ad growth, are you worried about your ad revenue?
I think we are cautiously optimistic that given the fundamentals of the market, given the fundamentals of our economy in the medium to long term, growth will come back. It may take a quarter here or there, but we certainly are going ahead with our plans with the belief that the market growth will be there, consumption-driven growth will happen. It may take a quarter or two longer, but our plans and the investments that we are making are continuing with that assumption.
Take us to the outlook on regional channel growth. Traditionally, this has always been a steady revenue stream for you. What kind of growth can we see here? Tell us about some of the new channel launches.
So, our overall network has had almost 80% of our business in terms of contribution to viewership has grown in market share in the last year. And if we look at the last 3 years, almost 70% of our share gains have come out of our regional channels. And we actually would prefer not to call them regional channels. They are for us, we think of them as cultures and viewers in different cultures who we are serving content to. So we are seeing each of these markets contributing quite significantly to our overall growth. So that's something which we are certainly seeing a lot of traction in, and that's the reason why today, as we talk of 4 new launches, we're talking of a Punjabi GEC which we are launching. This would be the first full play GEC in the Punjab market. We are launching 3 movie channels, one in Bhojpuri, one in Tamil and one in Kannada. So ZEE Biscope in Bhojpuri, ZEE Picture in Kannada and ZEE Thirai in Tamil. So we are going ahead with that belief that we have to serve all consumers across, as we call them, many Bharats, and make sure that we get a good share in each of these opportunities.
Sure. In light of the OTT ramp up and also higher overall content spending, what's the range of margins that you expect? Will it remain around 33% or do you see them contracting further?
So I think that's a conversation we keep having in our quarterly results conversation, where we've consistently maintained that we will deliver the 30 plus kind of EBITDAs while investing in all the growth opportunities from OTT to in the broadcast side, all the channels that we are launching. And we stay committed to delivering that kind of a number.
Okay, and while it's purely hearsay and there are no confirmations, there is some buzz of a GC channel and a possible JV with broadcasting majors. Are you worried about competition in light of this? What's your view on market share currently?
We've actually realized one thing in at least our industry, which is that the more the competition, the better it is. Because what we find is that the more aggressively markets are invested in to grow the market, the better it is for the business. And in fact, we've seen as more competition comes in any market, the market itself is growing. And then it's up to us as players in the market to gain more share out of that pie. So I think for us, we are actually very happy to have more and more competition coming in, because if you look at the business, it basically means someone is investing that much money to create that much content, and that expands the market. So the way we then look at it is that once the market is growing, it's great for all the players then to fight a fair fight to win market share.
Right. Also wanted to understand what your outlook is on the revenue growth in light of the broad-based economic slowdown that one is witnessing.
So we've obviously declared our first half numbers over the 2 quarters, and what used to be a very strong double-digit growth in advertising has come down, and in that sense there is a dampening. The overall market, the way we are looking at it, which used to be anywhere between 10 to 12%, we are seeing it to be a very low single-digit kind of a growth as a market. And the way we look at it is that we would certainly in that market still be adding revenue share. So we would be growing ahead of the market, and that is really how I would say we are looking at it just now. But yes, the market growths which were 10, 11, 12% will be low single digits on television this year.
All right, Punit, appreciate your time. Thank you for joining us.